Good afternoon, ladies and gentlemen. Thank you for joining us today for the webinar titled The Imperative for Innovation in Mining, presented by Peter Bryant, partner with Clareo and senior fellow with the Kellogg Innovation Network. My name is Heather Gravning, and I'm the social media manager here at SME, and I will be serving as the host for today's session. It is widely known that the mining industry is struggling to make profits and provide the returns on capital that investors are seeking. Peter Bryant will explain the industry's innovation deficit and its implications, provide examples of innovation at work, and discuss the 6 key principles your company must follow to implement a successful innovation strategy. Drawing on his experience working with some of the world's largest mining companies and juniors, Peter will share methods that work equally well with companies of all sizes. Mr. Bryant is an executive business strategist with more than 30 years of experience developing high-growth strategies for global companies. He is the leading authority on business innovation, especially around social license and technology in the resource and energy sectors. Now I'm pleased to turn today's session over to Peter for his presentation. Peter, if you'd like to go ahead and hit the Quick Start menu and share your screen.
Great. Thank you, Heather. Good afternoon, everyone, and it's great to be here, and I want to thank the team at SME for inviting me to speak about what I see as a vital issue for the industry at this very pivotal time in its history. Just by way of background, I'm not a miner, nor am I a mining engineer. But I've been involved with mining in various ways since I visited my first mine, which was MIM Holdings Mount Isa mine back in 1982, to implement a new financial job costing management system on behalf of GE, through to my focus of the last 10 years around innovation and new business models, including the initiative I've been co-chairing over the last 3 years with Mark Kudafani, the CEO of Anglo American. Suffice to say, this is a provocation that Mark gave last year and continues to give in various speeches. It clearly announces, which I think is a very commonly understood view, is that the industry suffers a huge innovation deficit. And also the industry faces some severe but well-known headwinds. Interestingly and conversely, innovation and transformational innovation, I think, is the only way forward for the industry if it is to become the profitable industry into the future. And that's irrespective of the place it finds itself in, whether you see this as a sawtooth or a boom-bust cycle. So what I'd like first to do is spend a little bit of time setting the table, if you like, and talking about what some of these headwinds and macro drivers are. So the first one, obviously, is the demand side. And we see still through rapid urbanization and rising middle class that growth will be continued, growth for demand for commodities will continue into the future. As I said before, I kind of see this as we're at the very bottom of a very large, nasty dip in the sawtooth cycle. But if you look over the long term, and I think this is a view shared by some of the majors, that we do see demand increasing. I think the key is the industry needs to provide these resources at an affordable market price to manufacturers and other people that use these resources whilst delivering a return on capital that investors expect. And I think it's that nexus that's very, very important that the industry has missed. So 2 questions is, well, how have we done? And how are we doing? Certainly on the return on capital, not so good. In fact, we would arguably the last 15 years, the investors have not seen the returns on capital that they would have liked to see. And what is the outlook? One would have to say very gloomy. And I think the industry can't hope that the traditional methods of driving efficiency or hoping that there'll be a swing back in market prices is going to be its savior anymore. So what are some of the headwinds that we're facing? First, and this is in no particular order of priority, is the environmental headwinds. I think community and societal concerns are increasing, and I think the mining industry itself is concerned about the level of energy it uses, the water issues, whether it has too much water or not enough water, air quality issues, land disturbance. All I would say is performance indicators are poor, and whilst the industry has made some good progress in these areas, and that's what we see that kind of patchwork, if you like. Some sites are doing better than others. Demands from society, and particularly the communities and regions where mines exist, their demands are massively outstripping what the industry is able to do. Next is community activism and increasing nationalism as distinct from nationalisation. We're seeing communities more and more not wanting mining development projects and are shunning the supposed economic benefits. Also, we're seeing increasing nationalism from governments. So to give you some statistics to put in that context, we've seen in the last few years over $25 billion of mining projects stalled because of community activism. And there have been in the last 5 years, over $50 billion of additional government appropriations. And these trend lines are in the wrong direction and are really quite unacceptable. And we want to avoid the headlines like we saw recently with the Las Bambas project in Peru, where 3 villagers were shot during a riot with police at the mine site. So irrespective of who's to blame, these kind of things come and rest at the front door of the mining industry. Second, next is the building, operating and closing mines is just getting harder. So finding mines, we know that whilst there's been a dip in investment for exploration recently, that investments have been increasing over the last decade significantly whilst discoveries are decreasing. So it clearly sends us 2 signals. I think one is all the easy to find deposits are now gone. But the other one, which is more significant, which I think we will bring back in the discussion a bit later on, is that more and more deposits that we do know about are uneconomic to recover under current mining methods. So there's a certain amount of resources, in other words, that we know about. Many are too small and some are too large, and current mining methods make it uneconomic, no matter what the price is of that resource almost. The building of mines, that is becoming more and more troublesome. Over the last 10 years, we've just seen an increasing tendency of not being able to estimate how much it will cost to build a mine. So CapEx has been increasing exponentially. The risk of these projects has been increasing. And community activism and, again, government, behaviours in countries have just exacerbated that problem. And I think what that's driven is pretty unhappy investors and a lack of capital. And I think as we go forward, even as prices increase, that we will see investors won't willingly give up money to invest in new mines unless they see a lot of the issues of the past effectively dealt with by the industry. Okay, running actual mines, we have to say that's not a really good thing. I mean, we are doing efficiencies which are getting our costs down, but really in the last 15 years we've seen exponential rise in operational expenditure. We've seen a collapse almost of productivity. Safety issues continue to persist in mines, and we've had a decline in ore grades. All this accounts to driving up the cost of production, I think, to unsustainable levels. And we certainly see that the path, and we talk to a lot of these mining companies, there's a growing recognition that the drive to efficiencies that have been the path that companies have used in the past are not going to get them to where they need to be. And I know as an industry we tend to lament how low prices are compared to their highs. I prefer to look at how high they are compared to their lows of the year 2000, which is just a mere 15 years ago. I mean, gold is 4 times the price of what it was 4 years ago. Iron ore is 3 times the price. And you continue to go through each of the colonies, they're all trading, even at these lows of 2015, at substantially higher levels than in 2000. But most importantly, is the industry is making the same or less profits they were in 2000. So, and I've had this discussion with many of the mining CEOs, is that you could argue the mining industry has presided over one of the greatest destructions of value of any industry since the Second World War during the super cycle. So not too drastic by any measure. Then lastly, closing mines. Obviously, the rehabilitation of the land is getting harder, and that we're seeing more and more communities and regions are demanding much better performance from the mining industry in terms of closure. We only have to look at the recent accident in Colorado that happened due to the EPA to recognise that there are a lot of issues with old tailing dams, etc., and thousands and thousands of mines around the world. I mean, it's a situation that cannot persist. And last but not least, this is all exasperated. So we face all these amazing challenges, yet we have underinvested in innovation during the super cycle. And it's pretty drastic. I think, the industry, we've done a bunch of benchmark research that we recently renewed, and the mining industry invests somewhere between 0.2 to 0.6 of 1% in innovation, and this is broad-based across the supplier base as well as the mining companies themselves. And this compares to the oil industry, which is investing around 2.5–3%, even with the collapse of oil to $45 a barrel. Manufacturing is in 3 to 4% range, and onwards and upwards, from aerospace to pharmaceuticals. So if you look at this picture, we're facing these serious headwinds. We see the traditional methods of getting us back to where we need to be are not working, not sufficient. We see this with an underinvestment in innovation, and yet we see innovation as the only path forward to transform the industry to this new place. So what we're doing is simply unsustainable. This, therefore, I think invites the industry to take a new direction and focus on transformational innovation, which is, and we'll talk a bit more about this in terms of developing new methods of mining, but also applying modern technology to reach multi-factor performance improvements, even within the existing processes. So if you look at the track record of the mining industry back to the early 1900s, absolutely we can see that there have been some tremendous innovations in the industry that have had a step change on efficiency and safety and other things. Things like block caving, drag lines, etc. But if you look back the last 30, 40 years, we've really flatlined, and any other industry would look at what we've done, since the 70s or even the 60s, or we could go even further back, and say what we've been doing is really only incremental, and we've not really employed the technologies that have allowed other industries to transform themselves and get to new levels of performance, cost per unit of production, new levels of safety, etc. So I think the challenge that we throw out to the industry is that it really has to grasp a new approach to innovation. So this graph is to provoke as well. As we can see, many industries have transformed what their if you like, outputs look like, whether it's from the telecommunications industry to the auto industry to aerospace industry. As I say here, Daniel Jackling would have no problem recognizing the latest P&H electric shovel. In fact, we've had several miners that have seen this, that back in the day when there was a shortage of equipment, they wouldn't have minded having some additional steam shovels on the site. So that takes us to, so given we have this situation the industry faces, what we need is a change both in approach and mindset. And what we see is there's 5 opportunities that really exist in mining. And a lot of this is about mind shift change. So this is not just necessarily about you need to apply certain technologies. First, the industry's really got to take a look and focus on the key value chain components. So where is the value in the supply chain and the value chain, and focus on there. And that really is connected to moving from a cost reduction to a value creation mode. A 5% improvement in recovery rates tremendously adds more value both in profit and market cap than does an equivalent 5% in cost reduction. So I think the industry really has to reshape the way it thinks in those areas. The opportunity presented by big data, but more about predictive analytics and moving to a much more platform level of information technology provides both a challenge because the industry has really been about delivering point solutions and really hasn't leveraged the power of predictive analytics and big data that we see in other industries. Talking about next generation mining methods, we'll use the oil and gas industry as a proxy for this in a few slides. But we really need to think about changing our mindset from scale is everything, and bigger trucks, bigger shovels, bigger mines has really been the way we've operated for many, many decades. And we really need to rethink that because it's just too capital intensive, too energy intensive, still too people intensive, etc. And then finally is this business model shift, which is moving to more of a development partner mindset. And we'll talk about that next. So I want to basically discuss 2 things. One is this whole approach to being a development partner, which is really how we engage with countries and communities and is really business model oriented. And then I want to take a closer look at the oil and gas industry and see what insights we can gather from that industry, and are there, in fact, technologies that we see are applicable from the oil and gas industry into mining. So first, the development partner approach. So this is an initiative that I've been co-chairing, as I mentioned earlier, with Mark Kudufani from the CEO of Anglo American. And this is really an approach where we want to shift the mindset of the mining industry from being one of an extractive company that does a resource development and leaves to become a true development partner with the community and other key stakeholders. And that is to basically drive better outcomes for everyone. The three key pillars of that are, and I won't go into depth about these, and happy to take questions on it later on if needed. One is around shared purpose. So this is really around working with everybody, key stakeholders, to come up with a shared purpose around a development before we develop the actual mine plan itself. Flourishing ecosystems is about the environment around us, water, air, land. And finally, it's about the legacy we leave as an industry after a project is finished. And that is about leaving behind a competitive country, competitive communities, and competitive companies that aren't tied by the waste to the mining project itself. I think the key thing about the development partner approach is, as companies adopt this, and they are, is that this will be a heavy influence and driver for the technology innovation agenda, because you can't be making promises to communities or commitments to various stakeholders that you can't back up with technology. And that's going to be very important whether you're talking about water, energy, air quality, etc. So these two, I see the development partner approach and change in mindset as intrinsically linked to the technology innovation agenda. So what does the oil and gas industry offer mining? I mean, I've often been told, actually when I first started way back with the Rio Tinto Industry Leadership Program, I was told that I didn't understand mining because there's nothing applicable from the oil and gas industry, because what they did was they extracted fluids, and mining extracted hard things, hard rock in most cases, and therefore there was no analogy to be drawn. So, but I persisted. So we've done a lot of work in the oil and gas industry, as we have with other industries. So I would really break up the opportunity that oil and gas offers us actually in three levels, and this is quite specific. So we can see sustaining innovations from oil and gas, so around the whole drilling and coring systems, and we'll talk about that in a bit more depth in a minute. Submersible pumps. There's just a tremendous amount of innovation that's happened in that industry that I think is easily transferable. Then we get up into the bigger breakthroughs, which is the whole approach to remote monitoring and geo-steering, which is really enabled, is one of the key enabling technologies for fracking. And finally, what we see is the whole game changers, which is the resource characterization technology that they have, which I think is still pretty basic and fundamental in the mining industry. Again, we've made progress in the last 10 years, but we're still way, way behind what the oil industry does. I remember a gentleman from one of the big major oil services companies did a tour of mines probably about 3 or 4 years ago, and he actually came back to me. He was Brazilian, and he said, you know, Peter, visiting all these mines, which was my first visit, about 5 or 6 mines in Latin America and Australia, he said, it's quite quaint, isn't it? It reminds me of the oil and gas industry 20, 30 years ago. So I thought that was an interesting quote, which I've kept. So let's have a look and walk through how maybe we can apply some of this oil and gas technology. And again, this is not absolute. Again, it's to provoke a different way of thinking for the industry. So if you look at traditional open pit mining today, it's very batch orientated, and we've mentioned it's very energy inefficient. It's huge in its capital expenditure, and we keep driving towards bigger and bigger mines, bigger trucks, bigger shovels. So scale, we drive for scale almost at any opportunity. It takes an enormous amount of time to go from a plan to get a mine operational, and we're just seeing those timelines being extended out unreasonably. It's still, even though we're getting autonomous vehicles in some of the mines, it's still very people intensive, and we continue to put people in, too many people in harm's way. So these are kind of, the drivers of a traditional open pit mine. So how about we have a concept that employs geosteering and horizontal drilling, which is proven within the oil and gas industry for fracking. Here, what we're talking about is we would actually drill and take out both the waste and the oil, so we'd still have the processing on the surface, but we would take out everything. Maybe here a pause just for those unfamiliar with fracking. I mean, it's probably, I think it'll, as we look back on the 21st century, it may go down as one of the greatest industrial innovations of the 21st century. In a matter of 5, 6 years, the US has gone from a huge deficit in oil and gas production into now the largest producer in the world of oil and gas, surpassing both Saudi Arabia and Russia. And it's been really on top of this fracking revolution, which has completely destroyed the notions of scale in the oil and gas industry. So we're talking about small pads being set on land for millions of dollars, becoming operational in a matter of months and extracting resource. This is employed not by the major companies. For those that don't know, there are over 5,000 E&P companies in the US deploying this technology, so it's almost a Silicon Valley kind of approach. The innovation cycles have collapsed. So where we saw from idea to adoption in a traditional oil and gas offshore platform could be 3 to 5 years, we're seeing the same thing happening in a matter of months in the oil industry. And it's really that extreme. So IHS recently announced that $1 of capital employed in fracking in 2015 will produce 65% more oil and gas than it did in 2014. And that just talks to the rate of innovation to drive enormous, game-changing efficiencies, which has enabled the fracking to be much more resilient in the face of Saudi's oversupply. So what we see here with microfactories is very small capex, small environmental footprint, interestingly, much more rapid. And the key thing is it's been able to unlock smaller deposits, small deposits that have been uneconomic to access and technically were unfeasible to access as well. So it's really crossed two frontiers here. So technically unfeasible and too small to extract. And I'll give you an example in Canada recently where, not using the fracking technology, but the same thing is happening in oil sands. Again, we're busting the notion of scale. So the next one is obviously to use the full hydraulic fracturing platform, which is a combination of 3 technologies. And this won't obviously work on every resource. Some of the bulk materials like iron ore and coal, this may not be perfect, but things like platinum and copper and gold, this could be a perfect approach, which is really just sucking out the resource. And when you realize the distance the horizontal drilling can do and the innovations about the number of wells that can be put on one pad and the industrial supply chain that backs this up, the opportunity is really, really phenomenal. And we do know that we have brokered some relationships between oil service companies and certain mining companies to investigate the application of this technology in certain resources. So I think there's a very exciting time. I mentioned the Canadian examples. So in the Wall Street Journal last week there was an article and it was headlined, "Tiny Oil Sites Overcome Slump." So I just want to read 2 paragraphs, if I may. So the mini boom along Highway 26 in Saskatchewan is upending the long-standing logic that this type of extraction needs to maximize economies of scale to provide the best return on capital. While Saskatchewan's oil reserves are a fraction of those in neighbouring Alberta, companies developing small-scale sites in the province say they are profitable, even with crude prices at 6-year lows. This is due to the advances in modular construction, ample rail and pipeline takeaway capacity, and an attractive regulatory environment. So again, we're seeing this kind of move away from scale, first in the traditional oil and gas through extraction of shale. Now we're seeing a bit different technologies, but again, this notion of scale being destroyed in the oil sands in Canada. And what's instructional for me is that the major large projects are not profitable at oil at $45, just because of the huge capex, but these smaller projects are profitable at a $40 to $45 per barrel. So I think we're going to see more and more of that. And, what I wonder is why the mining industry is not taking a close look at this, or maybe it isn't, and it should. So what we've done is taken a look at the headwinds that are facing the industry, the demand curve that we see. If you're a long-term thinker, the demand curve will continue to increase because of urbanization, growing middle class, 2 billion more people, infrastructure replacement. We see terrible headwinds in terms of environmental, operational, finding mines, setting up and running mines, and then closing mines. And then we're faced with an innovation deficit. So what we want to do is have a look at what I call the innovation paradox. So the innovation paradox is, in fact, when companies optimize themselves, in fact, that becomes their greatest trap. So if you like, in the world of innovation, we see 2 levels of innovation. One is where you are optimizing the core, and that's our castle that we use as our analog. is the metaphor. So here you would employ certain processes, types of people, technologies, etc., to basically drive efficiency, lower cost of production, do some levels of innovation around your existing processes. We've seen that. And sometimes that drives multi-factor performance improvements. But that is really incremental innovation at the core, and you have a certain set of people doing that. Consequently, also you need a set of people that are looking at transformational innovation, people that are looking and are ready to explore. So if you imagine, again, our metaphor here is the sailing ship, people that are doing exploration. And you know that if you swap people or processes across either of these metaphors, you know they'll go crazy. So the processes won't work on a ship as they do in a castle. Somebody that's happy living in a castle for 5 years would go insane on a ship, and vice versa. So this metaphor is to describe the need for organizations to become excellent and ambidextrous in both these worlds. And traditionally the mining industry has really ignored the sailing ship part of this metaphor and is really focused on the castle. What we are seeing is, and I was involved with the Rio Tinto project that started their Mine of the Future project out of Iron Ore Group, going over 10 years ago now. So they were the only ones that came out of the gates. But what we're seeing today is a growing recognition that this has to happen. So Anglo-American, with its Future Smart initiative, BHP, with a similar effort, are really recognizing this need, are upping their investment very significantly in transformative innovation, and in fact have programs now in place that will replace some of the traditional methods. And some of these will be longer term for sure. But what we need to see is more of this change in the industry. So we need to see both, the castle kind of metaphor and behaviour, but we need to see more of the sailing ship behaviour as well. As I said, Anglo-American, BHP are doing this. Goldfields is one of the tier 2 companies that we're starting to see is looking more closely at this as well. So if you sit back and say, oh, okay, I get this, I need to now become more innovative as an industry and as a company. And by innovative, I mean around the transformative side, and recognizing that a lot of the things I'm doing is really not sustainable into the future. It won't get me to where I need to be as a company. So what's an approach that I can have to do that? So what I want to do now is step through some principles that we see not from the multiple industries that we work both within client projects and also through the Kellogg Innovation Network that we see would work. So the first thing is this whole notion of what we call foresight, insight, and action. So it requires a company to develop an actionable long-term strategy that requires an understanding of how the external environment is going to unfold and translate that into insight and action. So we've used this approach in various mining companies. So if you like, foresight is about understanding the external environment from within and outside the industry, how it may unfold and how the trends and futures for the industry will unfold. And if you like, this is a little bit of scenarioing, but also it asks you to step outside the industry and look further downstream into the value chain, talking to manufacturers, end customers, etc. Then by insight, we mean to internalize how the environment may impact your business and develop a series of options to respond. And this key notion of optionality is very important. We'll talk about that a little bit later as a key principle of innovation. And finally, the action is deciding how to select and develop a portfolio of options, including the organizational requirements to maximize the impact and potential. So this is really kind of a three-stage overall process at a meta level that we would encourage companies to be very thoughtful about and develop. And this is very much a guide. What we see is, we develop this approach for very large companies, which tends to be more robust, if you like, and in depth, and more lean approaches for smaller juniors, etc. So this nomenclature of foresight, insight, action, and thinking can be applied to no matter what size company you are. So this is not, I think very importantly, is the territory of just the major mining companies or those that are members of the ICMM or whatever. So what I'll talk about now is a little bit about the principles of innovation, which leverage off that. So you need what I call an insight-driven approach to innovation. So this is about having a curiosity outside the industry. I hear too much from the industry, oh, we've tried that, we know about that, etc. It's about looking outside the industry, whether it's looking at the medical industry, the oil and gas industry, manufacturing, and looking for technologies that can be applied through adaptation into the mining industry, and driving kind of insights what those industries have experienced. It's very important aligning these with the strategic imperative facing the company. I think there's no point just saying I'm going to be innovative without understanding the strategic imperative. So internally, a company has to internalize the fact that it's strategically important that traditional methods of mining are no longer acceptable, and that through efficiency you can no longer get to the, if you like, the new floor of pricing of cost of production that's required. So we need to look at the strategic imperatives, and I think one of the major imperatives is delivering an acceptable return on capital to investors. So if you step back, as that's the financial one, and the second one is operating in a way that allows you to get your social license to operate and maintain that in a way that doesn't cause disruption during construction and operation of mines. I think those are two very critical strategic imperatives. The third one is about exploration of multiple pathways and the use of a portfolio approach. Here, as engineers, we all like to be kind of bet on winners and build to that. So this is about really taking an approach, and we'll talk about and a methodology that we have called FastPath, which is really about pursuing multiple options. You need to have optionality. You can't pick winners. So you need to develop a portfolio of opportunities that you pursue, technologies, etc., and also different ways of developing those technologies as well. And I think one of the things that we're seeing in our recent work is that there's a new behaviour that needs to come out of the supplier base as well. For too long, the mining industry has accepted suppliers delivering point solutions, whereas all other industries have been pushing suppliers to get to more of a platform level, plug and play, so they don't have to do a lot of the integration. And we haven't really seen that play out in the mining industry. We're starting to see that in some of the projects we're doing. We are pushing the supplier ecosystem to a kind of new approach to developing platform-based solutions for the mining industry. The fourth one, which I think is very, very critical, is creating a group, and again, it doesn't have to be an army. We've done some very large companies that have done this with very, very small groups. It's setting up a group that's insulated from the pressures of the existing business, but still remaining connected. So it's kind of that balance between being separate physically, but also different types of people, but still being connected to the business in a way that allows for credibility, because at some point the technologies that this group's looking at have got to be adopted. So it's a partnership throughout that we're talking about. So it's a nuanced kind of organizational structure and approach, but one surprisingly a lot of companies miss. And supporting that has to be a whole separate governance and funding mechanism, because we're inherently talking here about risk and introducing more risk into technology projects and other projects that is not normally accepted. If you like, it's kind of creating the same risk profiles that you do when you have exploration. You have a portfolio of assets you're looking at, some which won't work, some which will, and you have a whole separate governance and funding mechanism to fund those projects. So this is the same thing here. An example of that would be if two people come up and ask for $10 million each, and the first person's from an existing operation and say if they can invest that $10 million, they can guarantee a $1 reduction in cost to a 90% probability. Then somebody else says, I need this $10 million to experiment on applying this oil and gas fracking technology to see it may work. It's a 50% shot. If it works, the value unlocked would be huge, but also we could lose all our $10 million. If you use existing process and decision methodologies, you know it's the former guy that will get the $10 million every time. And then finally, this challenges companies for ambidextrous excellence. Probably back in the 80s, it was considered you'd either be very innovative as an organization or very efficient. You couldn't do both. And I think Jack Welch was the first person to really introduce the term of the ambidextrous organization, which is you have to be excellent at strengthening the core, driving efficiency, driving margins, improving cash flows, and all that, but you also need an organization that is excellent at the transformative innovation, the exploration, developing portfolios that have a different risk profile, etc. So I think the mining industry really has to adopt that. So I think, again, we're seeing in Anglo-American and BHP, we're seeing that push, we're seeing that at Goldcorp to a lesser extent. We've seen Rio, with its Mine of the Future group, actually probably pull back a little bit from this, or probably pull back a lot and let a lot of people go, and reduce investment, etc. So FastPath, not to be confused with the immigration lines in the UK, is a methodology and approach that we've developed to basically have rapid idea to adoption. What we've seen in the mining industry, and not the mining industry alone, but many industries, and mining in particular, have very long cycle times from the initial idea to adoption. And I think in the mining industry, it's pretty typical to see anything from 3 to 7 years for adoption from the time an idea is percolated. So, and that frankly is absolutely unacceptable. In fact, we're speaking to a major European supplier that had a breakthrough, what they considered a breakthrough technology, and they have got it through their various stage gates in their R&D. They've shelved the whole project actually after 7-figure investments because they felt the mining industry wouldn't be ready to adopt this technology for at least 7 to 10 years. Just, I think what was more scary was their assessment that was how long the industry was. And I think we'll talk a little bit about this fast follower mentality in a minute. So if you look at this process, this is about to take this multi-year process and shrink it into quarters. And you might say, well, we're dealing with heavy equipment, a lot of complexity. I understand how this could work in IT, but it can't work in the industrial space. And basically that's fundamentally wrong. This approach has been worked in heavy industrial areas, heavy equipment, in energy, aerospace, and jet engines, etc. And it absolutely can shrink down the time frame it takes. So this, the acceleration is really wrapping up and leverages concepts that are embodied in lean startup, the whole concept of minimal viable product, minimal viable markets, milestone-based funding, and the whole concept of pivot and learn. So all of these principles and concepts are embodied in FastPath. And I think the other thing FastPath does allows you to drive that portfolio much more quickly, and I think there's a key thing here we always say is about failing fast and failing cheap. It's really about proving out uncertainties within the ideas up front versus building out a engineering design and then building it, not telling anybody about it, only to find 2-3 years and millions of dollars later that it won't work. And the other thing it works on is also the human condition. So, what we find is, humans, our nature is once we have an idea, we're like a dog with a bone, we won't let go of it. And we want to prove that it will work no matter what the evidence is telling us. So we become quite stubborn. And that stubbornness is only amplified within organizations. Organizations find it very hard to kill something. So when you kind of combine the human nature with organizational inertia and unwillingness to shut things down, what we do is we create this ongoing pipeline of initiatives that never go anywhere, take millions and millions of dollars. And what that does is actually reduces optionality and puts pressure on innovation within the organization. So I'm finishing a little bit early ahead of time to give us more time for questions. So as an organization, both in Clareo and within the Kellogg Innovation Network, we're very fortunate that we sit in the sort of apex of, and at the center of technology, sustainability, and innovation, and really leveraging kind of leading edge practices from all industries in innovation. Really looking at sustainability in all its forms. We're not just talking about the environment here. Through the work we've been doing at KIN, through the development partner approach, and then through our efforts and evangelism of the mining company of the future, and all the technology that's embodied in that. So, it's been a real privilege to be working at the intersection of each of those and applying our experience from other industries into mining. I think, my closing comments that, to me, the innovation imperative has never been greater in the mining industry and demands a new approach. And despite the tight financial circumstances, a new level of investment and commitment is required by the industry. Fast follower is not a strategy. In fact, when I was doing an opening keynote at the annual SME conference in Denver earlier this year, one of the questions, the panel was there from various mining and supplier leaders. Everybody was celebrating what good fast followers we are as an industry. And one member of the audience wrote the question that said, if we're all fast followers, who's the leader? Okay, which I think is a very valid question. And I think what we see in the mining industry is this propensity to say, well, I will adopt this. When you prove this technology works in a mine that pretty much looks like my mine, which then becomes an excuse for inaction. So we need more leadership from the industry to go alongside the leadership being shown by Anglo American, BHP, and to a lesser extent, on an ongoing basis, Rio Tinto and Goldcorp. This is a huge opportunity for the industry. There's a tremendous amount of innovation occurring outside the industry. I think more importantly, the pace and rate of innovation and technology change is something we have not seen before. So it's a huge opportunity. And I think also that the solutions may be produced by companies that may not necessarily be within the traditional mining supply ecosystem. So we may be surprised, as other industries have been, where the innovations may come from. And again, the fact that we're capital intensive and have long cycle times is not a barrier to entry anymore for new innovative organizations that will disrupt the way we operate. So I'd like to thank you for your time, and I'm now opening it up to questions.
Peter, thank you so much for that wonderful presentation. At this time, we'd like to invite attendees to send questions via the chat panel. We do have a question already submitted. Carol would like to know, what are some examples of companies who are focusing on predictive analytics in mining? And do you know of any that are focusing on human behavior and less on equipment maintenance?
Okay, thank you, Carol. Good question. So there are some examples. So I think, Rio Tinto did this, what they call a Centre of Excellence. It's based in Brisbane, that looks at, I think runs their copper concentrators around the world, and they've done a lot of, and unfortunately, proprietary work around predictive data analytics. And I know, speaking to John McGarr before he left Rio Tinto, there was a tremendous amount done around the human side of that and looking at how humans interoperate. So they used some leading thinkers from MIT to help them with that. BHP is also looking at this very closely, as is Anglo American. I think Dundee Mining, which is a junior in Canada, has done some interesting work. So, in many cases, what we may see is the juniors have a leg up, junior producers, that is, not explorers, have a leg up on this because they just have smaller environments and can more rapidly adopt that. Also, we're seeing some movement out of Goldcorp as well. I think the thing that we're not seeing, though, I think the Rio is probably the most prime example of having done it, is a broad-based attack. So we're seeing certain sites like Dundee within one or two mines, or Rio across all its copper concentrators, and I think that captures coal as well. But we haven't seen kind of a universal approach. And I think there's a lot of complications. And there's some interesting software companies around as well that are doing some interesting things that I think would be insightful. So hopefully that gave you some additional information. And please email anybody if you're asking questions and you want more information. Please don't hesitate in emailing me as follow-up as well.
Absolutely. Thank you so much, Peter. That seems to be the only question at this time. Peter, would you like to make any closing statements while we wait for other questions to possibly come in?
Sure. I'd probably, I think the danger in the industry right now, and I'm looking at it as the industry cuts back, is, there's a typical thing that we see in innovation, which is the reversion to norm, so reverting to the norm. So as companies pull back and pull back expenditure and people capability, is the very thing they need to do, they'll cut out, and they'll just revert to optimizing and cutting costs and operations. And I've said this before, and just do what we've done in the 70s and the 80s and the 90s. But frankly, if you look at it, particularly with the return. You've got to look at this as a financial thing, the returns on capital, the diminishing social license to operate. This truly is unsustainable into the future. And I think Mark, going back to the first slide, Mark's provocation that if we don't change, the top mining companies in 10, 15 years will be very different to the list that we see today. And he doesn't make that statement publicly very likely. And I think the industry really does have to change.
Thank you, Peter. A question came in from John. To what extent do you see environmental regulations driving innovation in mining?
Okay, this is interesting. So, actually, I think there's two dimensions to the environmental regulation. I think there's the regulation that governments will impose, but I think actually the more pressure is going to arise from communities. Because I think regulation tends to lag society because governments just take so long. So I think environmental demands are going to drive technology innovation. I think the use of water, our impact on water supply, etc., whether real or perceived, is huge. So we consume too much water. Sometimes we don't have enough water. We don't take an integrated look at water in the community sense. We tend to look at it inside the fence. Again, there's a couple of examples where we have looked outside the fence. Air quality, I think people are getting more and more upset around the air quality from diesel gensets where communities are close. Land disturbance, visual disturbance. There was a Rio Tinto project, I think, in northern New South Wales, which was a brownfield project that got stopped by the community. That was largely employed by that mine because they didn't realise the open pit would actually come into sight of the town. So I think from an environmental pressure perspective, both regulation-wise in communities and to a degree NGOs, it has to drive the technology innovation agenda. The danger for me is that companies aren't well integrated internally, these two functions, and that could be a miss for the industry.
Wonderful, Peter. Thank you. That appears to be all the questions at the moment. I'd like to remind all of our attendees that we have recorded today's session. And probably within the next 24 to 48 hours, hopefully this sooner, I'll have this recorded version ready for you, and I'll be sending this out via email with coupon codes. Please use those coupon codes to re-register for a free version of the recording of today's session. Okay, right. And it looks like that's it for our questions. So, Peter, we'd really like to thank you again for this great presentation. I'd like to ask all of our attendees to please reach out to Peter at Peter J. Bryant on Twitter or through his email at Clareo Partners. And thank you again for this great presentation today, Peter.
Okay, my pleasure, Heather. Thank you, and thank you, everyone, for joining.
Wonderful. Well, thank you so much, everyone, for attending today, and we hope you join us for another SME webinar series in the future.